Welcome to Beyond the Balance, the podcast where life and work meet, collide, and sometimes even harmonize. I'm Miller Hoffman, and I'm excited to explore what it really means to find balance, not just the kind that fits neatly in a planner, but the messy, meaningful version that defines our lives. Today, I'll be talking with Gretchen Curtis with Integrated Funding. Gretchen, so good to be with you today. Welcome to the Tradewinds office, and welcome to winter.
Thank you. I'm kind of excited about the cooler weather because it was the hottest summer ever.
For real.
Yes. Thank you for having me. It's an honor.
Well, I know you spend plenty of time at the beach during the summer when, of course, the weather is behaving and acting appropriately, but it sounds like you're a winter fan as well.
Not a winter fan. I'm okay with the winter right now.
You can just tolerate it.
I'll take the summer over the winter, but yes.
Good deal.
Yeah.
Any exciting holiday plans coming down the pike for you guys?
No, we're headed to Greenville, South Carolina to spend time with our extended family. So looking forward to that.
Excellent.
But, yeah.
Well, that's not too far of a drive.
No
planes or trains to have to get on.
Nope.
And dealing with the airports right now is probably not ideal anyway.
Right.
Very good. I am so excited to have you on for the podcast episode because selfishly and in full disclosure for all of our listeners, I have personally used you here relatively recently for a refinance. So you and your team were instrumental in making that process as painless as possible. So of course, I'm biased. You guys were awesome. I'm excited to dive in much deeper into you, of course, personal background, but also where the professional aspect of things comes into play. Does that sound like a plan?
Sounds great.
Good deal. I think one of the initial questions I had for you is just telling us the quick story of how you've gotten to this point, whether it be at the firm in which you are right now or just the lending world as a whole. Can you catch our listeners up to speed?
Sure. So I, right out of college, did a couple inside sales jobs, just what was available at the time when I graduated. And my dad has been a lender or was a lender my whole life. And I just wasn't finding much joy in the sales part. And he said, why don't you give lending a try? I think you might like it. So I started at Bank of America in 2002. So I was 3 years out of college.
Wow.
Really didn't know what I was getting into, but fell in love with it. And that's it. It's kind of like once you go there, there's really nowhere else.
Good deal. So is that traditional for once you choose the lending route, you largely stay there? Maybe the firm is different, but lending is lending is lending?
Yes and no. It's because I was successful in it and I found joy in it, and there was not a whole reason to not do it. But once you are in it, it's such a steep learning curve. There really wasn't another career path I even considered. Yeah,
I know we just dove straight in. If we could rewind just a bit, can you tell us a little bit of your day to day? What is it that you do currently, and where has your experience been in the past?
Yeah. So the majority of my experience has been with a bank or a corresponding lender. And in February of this year, I switched to the broker world, which has opened my eyes to just how much better it is for me personally.
Wow.
And the reasons behind that is it's kind of like how you guys or Tim created Tradewinds. You don't have that corporate emails. There's a lot more fat, I would have to say.
Sure.
And, I don't think I would have started in the broker world because I learned so much, but now I'm able to get wholesale rates, wholesale pricing. And what I love most about my job are the relationships that I build. Right. And now that I can also offer lower rates and lower costs to them, that's made a world of difference.
I can personally attest to the emphasis you put on the relationship side of things. You and your team do an incredible job of that. It sounds like there are certainly advantages business-wise for the switch that you made earlier this year. What about some of the advantages personally? Do you find this to just be a more flexible space? This work-life balance, I know phrase is thrown out all the time, but is that also a component of some of the differences you've seen?
Yeah, so lending has always been flexible because you really can be anywhere to quote rates or look at things. It's opened up other opportunities for different products that I can offer. So instead of having one lender and having to be under one umbrella, I can look at, up to 10 to 15 different lenders and fit my client into a product that is much better than being like with the guardrails on.
Yeah. Just held captive by whatever logo is at the bottom of your email signature.
Yeah. That. And then, so not only that, but when you're with a bigger company, let's just say they need to raise more money in our region. Well, they could increase the rates overnight. So there's a lot more. It's fully transparent in this current position versus before. So you really didn't know what was going on behind the scenes. And now it just is what it is.
Got it.
Yeah.
Wow.
Makes a huge difference.
I imagine so.
And as far as work-life balance, it's the lack of just emails, all the just fluff and extra kind of useless.
Yeah, the red tape.
Yes, all the things that. All
overhead.
of that. You're constantly getting inundated. 50 emails every hour that just take time to delete.
Oh, man.
And really, I just want to do my job, and that's it.
You just want to be the best professional you can while establishing as top tier relationships as you can with the people you work with.
Absolutely.
Am I hearing you?
Yes.
Good deal.
Yes.
Is the broker world or the broker, I guess, structure that you're in now, is that relatively new, or has that always been around, just not right in front of you, let's say?
It's always been around.
Okay.
And what I didn't know. And in my mind, it seems scary because you're working with multiple lenders. So you're looking at multiple guidelines, but having the experience, it was not a hard thing to learn. So the upfront process is a little bit different, but that's where there's the cost savings, because we're not paying processors, underwriters, we're not paying them to do all of this. So it's different. It's always been there. And I guess I kind of always had this, brokers are bad, that you never know who your lender is going to be, but it's really not like that at all. It is just, it's so much better for my clients, hands down, and for me.
Understood.
Yeah.
Understood. There's a lot of similarities between the shift you made earlier this year and the shift that we made, being Tradewinds made about 3.5 years ago or so. Ton of similarities there, right? Getting out of a captive,
right?
The old stagecoach in the bottom of an email signature or logo on your shirt, to much more autonomy. You're able to be creative, really meet the people that you care about where they are, not just what a business policy says written by someone that you will never know.
Right.
And probably isn't near you and doesn't know how you operate and run your business. We were just talking about one of the things that makes you different from just any old lender out there when it comes to closing. But I'm curious to ask you, what are your business philosophies that may differ from the industry as a whole? Like what makes you different or special? And is that a result of you learning maybe the hard way, or just part of your personality?
I would say there are a lot of good lenders out there. When I started, what was important to me is making sure clients had peace of mind. This is top 3 stresses in the world are death, divorce, and buying a home. So, and sometimes someone's going through all 3 of those. So I want to provide the peace of mind during this process, because it's a big deal. It's financially, and then if you're dealing with things on the real estate side, and being cognizant of that. And, I've tried to build rapport, trust up front, and it's important to me for each client to feel like they are my only client. And, it's important to go to closings, to be seen, to know that I'm still here. And, my logo has been Lender for Life. And, a lot of people, because I have changed companies a few times, people come to me for me. I don't even think anyone knows where I work anymore. So
Right.
the lender piece, I don't think that matters as much like it probably used to 20 years ago, going through your bank to refi.
Sure. Sure.
Because the guidelines are the same for every lender. It's just my thing is, providing that peace of mind. And if they need a hand held, I'm holding their hand, finding out what they need to get through the process.
Well said. I mean, connecting with people and recognizing this is a significant life event. It can be really exciting. A first home, like you were telling me about, off speaker. That moment of helping a first time home buyer lock in.
I love working with first time home buyers.
Yeah,
I really do, and I love the education piece of it.
Yeah,
and for a first timer, I was at a closing earlier this morning, and she was like, "That was so easy." I'm like, "That's how it should." Hear. Yeah, that's how it should be. And I think the lender and agent have a lot to do with that, and I like to sleep at night. So a lot of times when I'm looking at if it's a refi or a purchase, I think about it what I would do, and it's a needs base. So everybody has a different reason if it's refinancing, but I try to look at it, I want everyone to have the lowest rate. I want to save them as much money as possible. So as your example, I found a new insurance agent for you because, save an extra $200.
Yeah.
Yeah.
And
that's
adds
important.
Up quickly.
Right.
Even with my background in finance, and I have a solid understanding of the moving parts and pieces. I mean, I asked you several times, like, what is your professional opinion? I don't do that day in and day out, and I don't know exactly where rates are and
I
what's
appreciate
reasonable
that.
to pay insurance wise. So at least my personality, I will willingly say, hey, I don't know and seek people who know much better than I do.
Yeah.
So
it's too bad they don't teach this in college, at least the basics, because the learning curve is so steep. But once you get it, you get it. But again, that is part of the reason I love the education piece of it. If it's a first-time home buyer or someone who bought 30 years ago and is buying again today, because things have changed.
Sure. So on the flip side then, right, we talked about the sunshine and rainbows example. First-time home buyer, potentially they're young, they're getting their life started, getting their feet underneath them. Swing that pendulum all the way to the right. Someone who is forced to sell a home, or they're no longer able to afford their current home, or maybe they're selling a home that they've recently inherited or as a result of a divorce.
Right.
Can you walk us through your experience and how you attack both the not so fun things in life?
It's just part of it is just listening, and because it is emotional, people will fly off the handle, and I get it and I understand it. And there's many people that I've just said, they'll apologize, and I'm like, I know this has nothing to do with me. I'm going to just show you what your options are and, guide you based on what your needs are. And it's sometimes you feel kind of like part therapist, but it really is just meeting people where they are.
Sure.
Yeah.
Whether it's really fun things or, again, not so fun things, still meeting them where they may be, even temporarily. A lot of stress.
Right. And that's where I say, like, I've got this part. So let me lose sleep on this, and you put your focus on other parts of your life, and I will handle this part about it.
Wonderful.
Yeah.
So let's talk more about the business side of your job and career. You clearly have experience with really large banking institutions like Bank of America. You're at a smaller broker now, Integrated Funding, with all the advantages that come with that. Can you walk us through what some of those advantages actually look like? You've alluded to a few already, but why are you at Integrated Funding?
Just being with the bigger companies, the lack of transparency was really getting to me. And And I've worked through many companies that you just deal with it and you just keep going. But it's more of the simplicity of it all. And there's not permission to see if I can change the pricing on this rate or that rate. Like, it's black and white. This is what it is.
Yep.
And you're getting the best pricing. And that's really, it was just all of the stuff, the extra stuff. And there are some bells and whistles, they will cover some marketing or health insurance, things like that.
Yep.
But overall, I was not finding joy in it. And a lot of times if it's underwriters, it's up to a human to decide if they see it this way or that way. And this feels like I'm going back to basics, like when I started, well, before the economy crash, but before '08. And it just feels more genuine and real. And no, I don't have the fluff, and I haven't missed it.
You mastered the fundamentals just to forget them.
Yeah.
So you're getting back to those.
Back to basics.
Solid basics, solid fundamentals.
Right.
Very good. Speaking of fundamentals, rough rules of thumb exist virtually in every business, and lending isn't an exception. In the refinance world, let's talk about refi for just a bit, and that's what you have just recently helped me with. I've heard a rough rule of thumb being if there's a 1% difference between your rate versus what the general going rate is, you ought to look into a refinance. Can you tell me if that's true? Is that reasonable? Is it appropriate?
Right.
Or what would you add or tweak to that?
So I would say for a long time that was the general rule of thumb. Now it depends on your loan amount. So even if it's a 0.5%, sometimes it makes sense. But when someone's asking about refinancing, I want to find out what their goal is. Is it to lower the payment? Is it to lower the terms? Is it going from an adjustable to a fixed or vice versa? How long are they going to be in the home? Do they need to pay off credit cards? Do a cash out? So there's so many reasons. So what I do first is look at or ask them, like, what's the goal here? Most of the time it's lower rate to lower payments. And all I need is the latest mortgage statement. I can tell you if it makes sense. I can tell you the break even. And some just like glare at you. And then others, it's like, let's just wait. Let's let them come down. So I'll have people ready.
Sure.
And I have a goal, a rate goal. So when it's time, you do it. But there's so many other factors because everybody is so individual that I like to find that out first instead of where you could see dialing for dollars. So you probably have your servicer reaching out to say, hey, you should refi just because they see your rate, but they have no idea. They haven't done the background. So, you might not have enough equity to refi. So there's a lot more that goes into it.
Totally makes sense. So more than just fixating on the rate. Well, that's an important part. It's not the entire story, if I'm understanding you. Got it.
Yes. But yeah, 1% was definitely the rule. I think it would make sense, but it really depends on the loan amount. So if it's $200,000 loan amount, it might not make sense. So yeah.
And that's something you would do for either prospective people looking
Anybody.
for services. I mean, really just taking a look at your loan statement, seeing that balance or the loan amount, as you say, the interest rate, payments.
Yeah. And finding out what their goal is in the, long term, short term.
There you
go. It all depends.
Yeah.
Yeah.
Have you seen just the refinance world change with the swing in rates that we've seen really over the last 5-7 years, let's say? I mean, they've been very low since then, but we've seen them ratchet up really quickly. We're seeing them fall a little less quickly now. But what's your take on just the interest rate world, knowing you're not an economist, neither am I?
Well, they change daily. Sometimes multiple times a day, which can be frustrating. But I've been through probably 5 to 6 refi booms in my career. So when I started, people were thrilled to get 6% from where they were.
Yeah.
And I think what is hard right now is COVID kind of skewed everything. So we really need to balance out prices of homes. And, you know, there's people in homes where the rate's 2.5% and they maxed out what they qualified for at 2.5%. Well, they can't move because they can't afford the new payment. But they have a lot of equity in their house, but it's, I don't know if I'm kind of going off track, but right now I'd say anybody who bought in the last year, it probably makes sense to at least reach out to say, will you take a look at this? Because we are at a 3-year low for refi rates. So, again, I don't know what's going to happen.
That makes two of us.
Every time something in the news changes, they'll either go up or down, and you jump on it when you can. So that's why I like to get everybody ready and ready to go.
The interesting part, and where, I mean, Tradewin studies and watches closely, is the big banks and institutions that have the best technology, the smartest people, the most experienced economists or investors or those in the lending world are laughably wrong when they try to project out what interest rates will actually do. Right? They can either go up, down, or stay pretty
like
linear.
The weather.
The weather, the market,
right?
I mean, things that are totally out of our hands. You're deciding, if I'm understanding, you're deciding to look at the full picture of someone, not just the rate is largely out of our control of going up, down, or sideways. And but the other elements of their plan may be, or their loan may be much more customizable, like the insurance component, which you helped me with, right? I can decide who I work with, what kind of coverage I have. Is it too expensive? Am I undercovered? Like, those are things within our control, not what the 30-year fixed rate is.
Right. Exactly.
In the marketplace.
Right. Yeah. And it's, there's been plenty of people who I could have refied, but once I know they're going to move in 2 years, I'm like, just save your money. Or, I don't just refi for the heck of refining.
Sure.
And, but yeah, I do think that we did see a pretty big dip when you took advantage, and that's why I was banging down your door.
You came after me. That's right. And I love it.
And I do think that things will start to settle. I think in the next 26, 27, I do believe that they're hopefully going to be 5s. I mean, that would be great. I think 4.5 to 5, 4.5 to 6 is a decent 30-year mortgage rate.
Got it.
Realistic and keeps people within their means.
Mm-hmm.
Yeah.
And you can correct me, but I think right around the 5 to 6 has been the rough 30, 40-year average. Like, it's abnormal for rates to be 2 and 3.
Correct.
It's also abnormal for them to be 10.
Yeah.
Is that rough average in the 5 to 6 ballpark?
I would say, yeah.
You know? Okay.
Yeah.
I think I've read or at least seen since like the 80s, which we know there were some pretty wild 70s and 80s, some pretty wild interest rate moves, but great. You've alluded to people who may be moving in the future. Let's switch gears and talk home ownership for a bit. I know that's something that brings you a lot of excitement, especially for first-time home buyers. Walk us through that general process, even for our listeners who have bought potentially multiple properties, primary, investment, a vacation spot, you name it. What are generally the things that you look for information to gather from people as you kick off that process?
So if you bought a house prior to 2008, it's changed drastically. So we ask for a whole lot more information, a lot more compliance involved. So you feel like you're getting asked for everything but your blood type. But generally, the biggest factor is credit. Credit score is a huge factor in what your rate is going to be. Then it's just depending on if you're W-2, self-employed, it's calculating your debt to income. So bank statements, income statements, that's really all I need to run numbers and see if you're comfortable with this payment. But it does feel like a lot of paperwork, but I try to get the least amount so that
to do a good job.
Right. Just to not collect more than I need to.
Sure.
But yeah, to me, it's a pretty simple process. I mean, you fill out an application, you know everything. There's not really, you can do it driving in the car, just, it's not like you're having to look things up.
Gotcha.
So, yeah.
Makes sense. How involved or uninvolved are you in helping, especially first-time home buyers, which may not be super knowledgeable around how much home can they afford or how much they need to borrow? Are you instrumental in helping them pick a target?
Yeah.
Or is it largely what lenders will come back and say, give the thumbs up for?
Yeah. So we've got our guidelines, and what you can be pre-qualified for is different than what you may be comfortable with, because I'm giving you a mortgage payment based on your gross income. So let's just say the numbers look right, but we don't take into account what you spend going out to dinner or what you spend on this or that. We only pull off of what's on the credit report. So there's many people who I'm like, well, you qualify for $800,000, but really to live within your means, you need to buy a $400,000 house. So that's where I get with them. When my first questions are, how much do you want to spend totally out of pocket? And what is your target monthly mortgage payment? So we start there, and depending on which one is important, they're both important, but sometimes people are very driven on, my payment can't be more than this. So I will back into a sales price.
Got it.
Yeah.
Okay.
So again, it's all individual.
Very personalized, at least the way that you run the business is.
Right. And so,
personalized.
and you also, if you're going to have a roommate, or your spouse isn't on the loan, but they have income, it's like, that income's coming in to help pay for other things. So that's, the guidelines are black and white, and we just play within those. And I can tell you from the beginning if you're going to get pre-approved or not. And I'm not going to send anybody out with a maybe.
Got it.
Yeah.
Just because
you've
been doing it long enough.
I like to sleep at night.
Rates, and of course, what
the guidelines
would be in someone's best interest. I want to take a second and really give you a shout out on that, because I find, or I would guess rather, so many people are going to look at whatever lending institution will provide them, bank, online, whatever, and say, that's what you can afford. You are deciding to take that extra step and saying, what the bank says you can borrow is not actually what you can afford, based on how you make your money, who is contributing, what are your other financial circumstances. What a superpower to have, and what an advantage of working with you, being able to reverse engineer, hey, what does that ideal monthly payment look like?
Right.
It might be wildly different than what Bank of America, to pick on them, maybe comes back and says, well, we'll lend you $800. If that monthly payment only yields $400.
But it might not even be a true pre-qualification. They might have missed, we can't count that towards your qualified income. So it's like, when there's a vast difference, I will point out different things, and it's all led by the guidelines, and like one bank can't do something that another one can. Yeah.
Got it. So it's pretty standardized, or
it is
pretty fixed in that way.
Right.
Got it.
Yes.
So to swing pendulum again on the other side, so instead of first-time home buyers, really, it's a new chapter in their life, swing all the way on the other side. I have an awful lot of clients who are looking to downsize, right? They've been in a home for maybe decades. Perhaps it was their first home that they purchased.
Right.
Do you deal with a lot of retirees either looking to downsize their footprint, whether it's I don't want to mow the grass anymore,
Oh, yeah,
or
absolutely.
3,000 square feet,
Yes.
and we need to cut that in half.
Yes.
Is it a different conversation with retirees or maybe people more mature in their lives, let's say?
I would say sometimes the retirees and the first-time home buyers are in the same category because it's been so long since they bought a house and you barely needed anything. So it's kind of teaching them the new way versus, the ones who are buying a house, let's just say 3 or 4 years apart in the last 10 years. They've got it. And yeah, I don't discriminate on any age or anything. Yeah, if you need help lending, I'm here and can offer you what you qualify for. And a lot of times retirees will be shocked because they, what they're bringing in, it might not be income we can use, what they're using to live off of. So that's also a difficult conversation. Mm-hmm. But again, it's transparency and just saying, this is how the bank or the lending sees the numbers. Like, this is what we can use.
Got it. Mm-hmm. To double click on that, what kinds of income for retirees do banks largely not count, or maybe they discredit over just your formal W-2, your working income?
So some people will not tap into their retirement, and so they just live off of whatever, maybe the cash they have. So there's sometimes where we need to set up a distribution from the retirement to be able to use it. But if it's not already set up, I mean, that's a whole other topic.
Sure.
I try to find ways where we can use the income. And when it comes down to that, then I have to drill down and figure out a way to make it work. But some people are just kind of living off of what they have in the bank and just are not ready to tap in.
Got it.
Yeah.
Got it.
But it's got to be on the paper.
So just a little
Taxes.
different for retirees as they're reporting how they pay the light bill.
Yeah,
right. Whether it's retirement accounts they have, other savings, maybe just cash, as you said.
Right.
Along with Social Security or pensions.
Yeah, and we can use all
that.
of that. Anything that's that's on your tax returns.
Got it. But just pulling from cash in the bank is hardly a formal income source, is what you're saying. Okay.
Right.
Makes total sense.
Yeah.
Let me ask you 2 more questions, and then I'll let you get out of here. Is there anything I've overlooked as we've talked about refining and just home ownership in general? What nuggets of information or general advice, of course, would you give to our listeners for both of those categories?
I would say, if we go on the refi, since we're kind of in a refi opportunity market right now, happy to reach out to me to say, hey, does this make sense? Start a relationship, let's go through some goals and like what rate would make sense to refi. For purchases, I do think it's important if you are given a referral of a trusted source and check the reviews, price it out just in case. There's a lot of times where things can be hidden.
Sure.
And, if I do have a client that has another rate, I like to see it just to look at all the fees because these are not forms, good faith estimates is what they're called. These aren't things that you look at all the time. And I can look at it and tell you, yes, that's good. No, did you see this part? So, I think it's important to have a trusted source review whatever that fee sheet is to make you feel confident of, moving forward if it's a purchase or a refi.
Sure. So even in the integrated funding world, the broker world, as you mentioned, one of the advantages, you're able to go out and work with a ton of different options. I think that's one of the advantages you have over someone who's more captive, let's say, or they're only able to offer you what the bank either approves, knowing that it's a pretty fixed or pretty controlled industry, but continuing to understand what the pricing actually looks like, maybe not just the number at the very top or the bottom.
Right.
How do you actually get those numbers? and the story behind them,
Right.
if I'm understanding you.
Yeah. Agreed.
Good deal.
Yeah.
All right, Gretchen, I have one more question for you as we wrap up. I want to know a story behind a life lesson that you've come to know personally. Does anything come to mind when I ask you that?
Yeah. I think, I've had a lot of life lessons. But one that I go back to is listening to my gut. And
Ooh.
it's when you're first waking up, kind of that feeling of this feels right before you have opinions, before you're doing your morning routine. Like every time I've listened to that, even though it's scary once I wake up and think about it, that is always the right thing. And it might not be popular in a lot of people's eyes, but when you truly listen to yourself, I feel like you can't make a bad decision. And if you do, you do. But it comes to me when I'm not fully awake. And I think everybody could probably relate to it. Like, oh, that's, and I've listened to it in my personal life, and I've listened to it in my business life. And just like deciding to go from more of a secure-ish company to broker world, like I just, it's just listening to your gut.
Yeah.
Yeah.
I think everyone knows what that pit in your
You just
stomach
know it.
feels
You know
like.
it. You know what it is, and you might not want to make it. It's scary, or maybe it just feels so right that it's right. You just jump.
Wow.
Yeah.
And I love the aspect of like right when you wake up, right? That's
It's
like
before
it's
you're
raw.
really,
It's right there. It's before you can distract yourself or
Yeah.
like repress it.
You're still
or
not
try to
completely
ignore it.
conscious, but
Man,
Yeah.
okay, cool. So listening to your gut and then acting on it in a way that you feel aligns.
it may take time, but
Of course.
if
Yeah.
it keeps coming back, it's like, okay, got it.
And that pops up both in your professional and your personal life. What a great way to end. Thank you for joining us
Yeah.
for Beyond
Thank
the
you
Balance.
thanks for having me.
I appreciate you allowing me to pick your brain here for just a little while. We will include Gretchen's information if you'd like to reach out to her.
Absolutely.
And her services. We would love to put everyone in touch. But thank you, listeners, for checking out Beyond the Balance. We will be back at you with the next episode here shortly. Thanks.
TradeWinds LLC is an investment advisor registered under the Investment Advisors Act of 1940. The information presented in the material in general in nature and is not designed to address your investment objectives, financial situation, or practical needs. Prior to making any investment decision, you should assess or seek advice from a professional regarding whenever any particular transaction is relevant or appropriate to your individual circumstances. Although taken from reliable sources, TradeWinds cannot guarantee the accuracy of the information received from third parties. The opinions expressed herein are those of TradeWinds and may not actually come to pass.